So let's just start off with the overall view when it comes, and the sentiment when it comes to the equity market. It seems that there are a lot of divergent views. There's some people that think that we could actually see positive sentiment overriding the negativity into this year, and then vice versa as well. Where do you stand on this? Do you think we could see positivity into 2012?
Okay. Basically, the highest index we've seen of the entire stock exchange is the 21,006. But since then, there's been a decline since January 18th. And in the last 2 trading days, today and then yesterday, we've seen some positive figure, and then that's largely due to banking stocks doing very well. Today, Dangote Cement did very well too. We've seen some other stocks outside banking sector do well. In fact, for us to see a major bullish run and an increase in significant increase in the index for the equities market, we will need companies outside the banking sector to pull up positive results to help investor confidence, because right now it's about the confidence, and then there is now major alternative in the fixed income market that people are selling down. I mean, going in for the short term before results come out, and then take profit and then go to the fixed income to stay 182 1 year tenure. And that's what's happening currently. Okay,
so Bankole, let's also just touch on the fixed income market, and let's look at the yields over that are trending within the secondary market. We saw the issuance of OMO T-bills, and this, of course, is starting to change the yield environment. Add some color for us on that.
Yes, in the last 1 week, we've had a very active market, and it's been bullish. Basically, the T-bill market, in the T-bills primary auctions last week, we saw the 1 year maturity 364 days stop at about 15.5, and it was a clear indication of what was going to happen on at the bond auction on Wednesday. And so we had, most analysts or contributors have said that bond yields will stop at 16. Anything above 16 will be very attractive, and that was what happened. The 10-year 2022 that was issued, that was reopened, actually stopped at 15.983 levels. This showed that the demand was, real. And then if you look at the amount of demand they got, it was about 80 billion, 50 billion for the 2019. And then that amount, that's over 125 and 30. What we're going to see is that demand is going to be carried on to next month. As we speak, the interbank, the secondary market bonds, the yield have have dropped from 16.4 that it traded in the last week. It's traded to down to 15.9 levels right now for 6.4.
So Bankole, are you expecting this bullish trend to continue into the next while? Because we've seen this bullish trend for up to 3 weeks now.
We will see the bullish trend continue, especially where the major focus is on the fixed income market. Like I said earlier, the equities market right now, people just go in over the short term, take marginal profits and leave. It's not, investors are not staying long term. As we have seen, they're doing more of T-bills, and we've seen even foreign direct inflows for T-bills and bonds. So basically, it's a bullish trend, and this will last up to months to come.
Let's also just touch on the FX market. We've seen quite a bit of stability that has come through for the Naira, sitting at around 157.5 or so. Oil majors slowing down on their sales. How's this impacting the overall CBN supply into the market?
Yes, the CBN supply has not changed yet. We expect the CBN to up its supply a bit in order to defend the Naira. If it's just a $50 million, $100 million increase, it could help. Because what has happened is that there's been a wane or decline in the money supply by oil majors. And Interbank has drifted back up from 157.50, 55 levels to closing today at 157.95 levels. And clearly, it could go into 158 at start of Monday's trading. Basically, if the CBN does not increase the money to be sold on Monday, we're going to have 2 auctions next week, Monday and then Wednesday. When this is done, I expect CBN to at least just increase their supply to keep Naira at the levels they are presently, because the confidence on the Naira, the currency, is actually helping bring fixed income investors from outside the country, basically. Because if you come in, you can then get out whenever you want to go out at a better rate, that is buying the dollar at a cheaper rate, basically. But if there's a turnaround right now, it may not help the fixed income market and the funds that are flowing in right now.
Let's look at the overnight rates. We saw money markets drop. Well, we saw a drop in the money market rates overnight from last week, hitting around 13.5% yesterday, and then climbing subsequently to around 14.5%. We know that there's various auctions that are going to come to the fore that could actually affect the overnight rate. What kind of scenario are you looking forward into for the next week?
Okay, overnight rates are back at 14.5%. They dropped during the week. I mean, as a close of yesterday to below 14. But as debits are hitting the system, debits that have to do with WDAS, that the dollar that has been sold, I mean, we're having inflows of dollars, and then they are debiting Naira, then the bonds issuance, and then every day we've had almost every day we've had maturities of open market operations for treasury bills. Over 200 billion have been issued, and they have sold in the last 1 week about 153 billion. That in itself is a huge chunk going off the system. So rates are back up basically. Yeah. But we are all looking to this month's MPR. I mean, that's going to be a clear indicator of how things will be basically. There are speculations of CBN going to maintain, and I mean, we've had IMF say that further tightening may just harm the economy and all that. We are beginning to see more things concerning